morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss three things. Firstly, a lot of exporters had given a call last week, and all of them has asked two questions. First, why forward premiums have fallen. So in the first part of the presentation, we will discuss that thing. And second most important question what they have asked is whether the rupee will move towards 76 or whether it will go back to 74 level. So that we will answer in the second part of the presentation. And in the last part of the presentation, we will discuss a trading strategy for coming days. So now let us start with the first part of the presentation. Okay, forward premiums गिरे क्यों? Before answering that question, let us understand how forward premiums are calculated. Forward premium is nothing but interest rate differential between India and US, right? Abhi, on the first day of Monday last week, the premium were close to 4.4%. In rupee term, it was 3 rupees and 30 paisa. The premium has come down to 2 rupees 90 paisa. There has been a 40% reduction in the premium. इसके दो रीज़न है. पहला रीज़न है कि जो इंटरेस्ट रेट डिफरेंशियल था वो कम हो गया. वो कैसे कम हो गया उसको समझते हैं. आरबीआई का जो मॉनेटरी पॉलिसी था, दे सेड दैट दे आर नॉट गोइंग टू इंक्रीज द इंटरेस्ट रेट. उसके बाद में यूएस का सीपीआई डेटा आया, विच इज इन्फ्लेशन डेटा, विच केम एट 40 years हाई, because of which US 10-year treasury yield went up. Because of the entire two reason, the spread जो था interest rate differential का कम हो गया. Now, when the difference has come down, it has an impact on dollar rupee pair. Now let us understand that. Now let us understand what impact it will have on dollar rupee pair. As the premiums have fallen down, तो जो भी importers है, they will go and buy dollars. Earlier when the premiums were high, importers were reluctant to buy dollar rupee pair. Now as the premiums are low, they will go and buy dollar rupee pair, because of which the dollar rupee pair can become more weak. That is the first key takeaway from the falling premium. Second key takeaway for all exporters and importers is that we have seen last week also, and in earlier days also, last year also, that premiums have become volatile. So it is very important, and whenever they take rates from their bank, they should verify the premiums from a legitimate source. They can verify it from our screen like CR Forex live ticker screen or any other legitimate source. Now let us move to the second part of the presentation, that what is the outlook for dollar rupee pair. As discussed in last week video, that any dips has to be taken as an opportunity to buy dollars. As we are expecting, the pair should move towards 75 to 75.30 level. Same thing has exactly happened. This is all history. Now in NDF, dollar rupee pair has closed above 75.50 levels. If on Monday morning RBI does not intervene by selling dollars, then there are high probability that the pair will move towards 76.30 first target and 76.50 second target, because of three important reasons. Pehla, crude oil prices are rising and we expect the crude oil price to continue to rise. Dollar index is moving up and we expect dollar index to move towards 100 level. Third, any spark between Russia and Ukraine will create pressure on oil and dollar rupee pair. So the outlook remains the same. If RBI will not intervene, dollar rupee pair will move towards 76.30 and 76.50 levels in coming days. Now let us discuss strategy for exporters and importers. Let me start with thin margin exporters. Thin margin exporters must have taken costing close to 74.50 to 74.75, or maximum they must have taken at 75 levels. For them, we are suggesting that 50% they can cover on Monday morning. For remaining 50%, they can wait for a target of 75.80 and 76.30. Stop loss has to be 75.30 or costing, whichever is higher. Now let us discuss strategy for thick margin exporters. We have been advising thick margin exporters to wait for 75 and 75.20 levels for their coverage. Now that level has come. We will request them to further wait for 75.80 and 76.30. They can keep a stop loss of 75.30 on a closing basis. Overall, thick margin exporters has to ensure that they do not hedge more than 50% of their annual turnover. Now let us discuss strategy for importers. Importers ko we have been advising to cover at least 45 to 60 days import from 74 levels. But if someone has missed and not cover the near-term imports, say for next 15 days, we advise them to hedge via at the money call option. This will help them to protect their upside risks and it will give them a downside participation if RBI comes and sell dollar in the market. Now let us move to the final part of the presentation, trading ideas for the coming week. लास्ट वीक जो कॉल दिया था उसमें से GBP/INR का स्टॉप लॉस ट्रिगर हो गया है, उसको छोड़ के यूरो USD वी आर स्टिल एक्सपेक्टिंग इट टू गो टूवर्ड्स 1.1150. डॉलर यूरो USD के अंदर पे ट्रिपल टॉप फॉर्मेशन हो गया है at 1.1480. So keep a stop loss of 1.15. Target same है 1.1150. Similarly, Euro/INR also we are targeting 84.20 in coming days. GBP/USD also we are targeting 1.33 level. Apart from that, in this week, if anyone wants to trade in USD/INR pair, ideally they should buy dollar rupee close to 75.50 to 75.60 level with a target of 76.30 level, stop loss of 75.30 level. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे. Thank you.